Gresham Ford.
This is CNN.
Enron, the once mighty energy company, is on the verge of bankruptcy tonight. Dynegy pulled out of a proposed deal to buy the company. Enron stock today plummeted, dropping 85% after its last hope, its credit rating, was cut. Cut, in fact, to junk status. More than 180 million shares today were traded, making it the most actively traded stock ever on the New York Stock Exchange. The dramatic decline, the speed of Enron's decline, simply stunning. Shares traded at more than $80 a year ago. Tonight, 61 cents a share. $62 billion of shareholder value wiped out. Enron's spectacular flameout is unprecedented in business. Casey Wyan has more on the story now from Enron's hometown, Houston, Texas.
The fatal blow to Enron's efforts to salvage its merger with Dynegy came early Wednesday when Standard & Poor's downgraded Enron's debt to junk status. That triggered a clause in the original $9 billion deal that allowed Dynegy to walk away, a move the company says it made to protect the interest of shareholders. The downgrade and subsequent collapse of Enron's stock likely makes bankruptcy the company's best option.
I think it pretty much seals the fate of Enron in the sense that a bankruptcy filing will be shortcoming very quickly in the offing here.
Why is that?
Basically because it's going to hamper Enron's trading abilities to such an extent that they're not going to be able to enter into even the shortest term type of trades and agreements with counterparties.
Enron employees say they expect a bankruptcy filing soon, though the company would not comment. This woman photographed Enron's headquarters, saying she wanted to preserve her memories. Layoffs are expected, especially in the company's trading operations. Some were suspended Wednesday because market participants wanted to avoid dealing with Enron because of its deteriorating financial condition. As for Dynegy, Chairman Chuck Watson says the company tried hard to salvage the deal, but in his words, sometimes the company's best deals are the ones it does not do. Watson also says you just have to know when to say no. And Lou, today Dynegy said no.
Was it, in point of fact, the downgrade in the rating of Enron's bonds that led to the decision? Was it that simple?
Absolutely. That's what got the ball rolling. It wasn't as direct as that, but when the downgrade happened, it triggered several other clauses within the original $9 billion buyout deal that allowed Dynegy to back out. Now, of course, Enron says it's still studying Dynegy's decision to pull out of that deal, so this could be one for the lawyers, and if in fact Enron does end up in bankruptcy court, it's definitely going to be one for the lawyers, Lou.
Yeah, it seems like this is going to be a halcyon period for lawyers, irrespective of the course this takes. Dynegy has some exposure as well to Enron. How significant?
Not very much, according to the company on its conference call with analysts and reporters today. They said that their exposure is limited to about $75 million, and they've taken steps over the past several weeks to limit that exposure. They took further steps today, suspending their dealings with Enron's trading operations.
Turning to the anticipatory, I hope it's anticipatory rather than simply speculative, but the likely fate of the employees of Enron in this situation.
Hard to tell, and employees within the company that we spoke with said that there are a lot of rumors swirling around. Of course, there's the expectations that there are going to be layoffs. There have been layoffs over the past several days, and some employees said that those were continuing today. Others said, though, that they heard that layoffs have been halted in anticipation of a likely bankruptcy filing, Lou.
Okay. Casey, thank you very much. Casey Wyan reporting live from Houston, Texas. Coming up next here, the United States sends more troops into Afghanistan. We'll have the latest developments on the war for you. Then the incredible story of a family who tried to cash in on a national tragedy, claiming that the wife died in the collapse of the World Trade Center. Also tonight, we'll be joined by the National Commander of the Salvation Army on the impact September 11th has had on charitable donations in this holiday season. All of that, a lot more, still ahead. Stay with us.
Good evening,
everyone. Enron, the once mighty energy trading powerhouse, is near collapse tonight. Its $9 billion proposed merger with Dynegy fell apart today, and analysts say that Enron might be forced into bankruptcy. Dynegy scrapped the deal following a string of negative developments in recent days, culminating with today's downgrade of Enron's credit rating to junk status. Scott Gervey has more on the stunning demise of Enron.
As Standard & Poor's, Moody's, and Dynegy pulled the plug on Enron, shareholders headed for the exits. The one-time high-flying shares fell into penny stock territory, closing at 61 cents, down 85%. At the beginning of the year, Enron shares traded above $84. At one time, the Enron online trading system bought and sold $3 billion worth of commodities each day. Today, the screens went blank. Dynegy's offer had valued the larger Enron at more than $10 a share. Talks to negotiate a lower price failed. Dynegy's decision to call off the deal came after the two bond rating agencies cut Enron's credit to junk bond levels. That triggers lending covenants that could force Enron to repay billions of dollars in outstanding debt.
This means that there's about $3.9 billion of off-balance sheet debt, which can come due at any point in time. Enron does not have the liquidity to pay this off. I think the possibility is very real that they may have to seek Chapter 11 protection.
Enron's problems had been the talk of Wall Street. It acknowledged overstating earnings by 20% over 4 years and keeping debt off its balance sheets through questionable business partnerships. With the stock price plummeting, Dynegy said it had cause to kill the deal, citing in a statement, quote, Enron's breaches of representations, warranties, covenants, and agreements in the merger agreement, including the material adverse change provision. Enron said it is evaluating and exploring other options. This could be one of the biggest corporate collapses in history. Enron is the nation's 7th largest company in terms of revenue, and analysts say more bad news can be expected.
Now that Dynegy has announced that they intend to back off of the merger, I think it's reasonable to assume that there'll be further rating actions coming in a relatively near term.
More than 180 million shares of Enron changed hands today just on the New York Stock Exchange. That's a new exchange record for daily volume for a single issue. Scott Gervey, Nightly Business Report, New York.
Shares of Enron today continued to plummet, losing 40% today, finishing at 36 cents a share. That's right, 36 cents a share. That stock had been $80 at the beginning of the year. Investors dumping those shares as the energy firm attempts to fend off bankruptcy. Just yesterday, Dynegy backed out of a proposed plan to purchase the company. That after Enron's credit ratings were downgraded to junk status. Casey Wyan is in Houston, the home of the corporate headquarters of Enron, and gives us a look at what's next for Enron as best we can tell. Casey.
Well, Lou, today was a day for Enron employees that they reported to work not sure about their future and not sure about the future of their company. It was also a day that Enron, for the first time, told us about what it is telling its employees. And those statements that Enron has been making to employees shed a lot of light on the company's financial picture. First of all, Enron told its employees that they would be the first to hear about any potential layoffs. Those layoffs, of course, are widely anticipated. Enron says it has made no layoff notices, no announcements, and has none planned at this time, but it did assure its employees that they would be the first to hear about them. It also said that it is in the process of restructuring. Enron management has said that they're trying to do that outside of the bankruptcy court process. All the analysts we speak to, the employees we've spoken to today, and the people here in Houston seem to think that there's no other option for Enron besides bankruptcy. But the company, at least in its latest statements, has said they're still trying to explore other options. Now, perhaps the most telling statement that was made by Enron management to its employees today was this one. They said they will be paid, they will get paychecks tomorrow. The fact that a company that was once the stature of Enron had to reassure its employees that they will be getting paychecks tomorrow, to me, was incredible. They said nothing about those paychecks in the future, Lou.
Let me ask you, Casey, I think it's right. Number 7 on the Fortune 500 list as of last year. This company has really just, the devastation here is unbelievable. Is there anyone you've talked there that anticipated a problem, anything approaching this magnitude?
Not approaching this magnitude. There are plenty of people here in town who anticipated problems, who did not understand Enron's finances all along, and then especially had big questions once the third quarter earnings came out in October that were sharply lower. But no one anticipated that this company would unravel so fast.
Okay, Casey. Thank you very much. Casey Wyan reporting live from Houston, Texas.
Okay.
Enron's downfall leaves, of course, a mountain of debt. Not only $13 billion on the company's balance sheet, but more than $5 billion of other debt, most of which is tied up in complicated, is an understatement, complicated share trust partnerships. Alan Chernoff has the story.
Because Enron's credit rating has been downgraded to junk status, the company is obligated to pay off the share trust partnerships within 4 months, a total of $3.9 billion. Add to that $2.1 billion due this quarter of bank loans and debt service. The next payment is $55 million due next Thursday, according to credit market participants.
They do not have any kind of a severe liquidity problem in the very near term. The problem is more in the, I guess, medium term as things become due over the next couple of months.
Enron has a broad list of creditors, including the bankers who tried to shepherd Dynegy's takeover offer. JP Morgan Chase says it has $500 million in unsecured Enron debt and $400 million secured by Enron pipelines. Analysts say Citigroup has $500 million invested, though the company refused comment. Other U.S. banks with exposure: Bank of America, $500 million, Bank One, $300 million, and Wachovia, $50 million, according to CS First Boston. Overseas bankers today said they are at risk as well, including Credit Lyonnais with commitments of $250 million. Many energy companies have exposure from their trading activities, though they say they have been reducing their dealings with Enron in recent weeks. The president of energy trader Aquila says his company has a $50 million exposure.
And although that's not an insignificant number, it is a very manageable number for us, and we're looking forward to a very orderly transition.
Duke Energy says it has exposure of about $100 million. Williams, less than $100 million. The company today saying it expects to meet or beat earnings targets. El Paso Corporation, about $50 million. Reliant Resources, $80 million. And Mirant, $50 to $60 million.
Chevron Texaco invested $1.5 billion into Dynegy on November 9th. The company now has the right to increase its ownership in Dynegy to about 36% from 26%, or ask for its money back in 2 years. Investors don't seem overly worried. Chevron Texaco stock today rose 90 cents. Lou?
That was, I think, the only stock associated with this deal that rose on the day. Alan, this is extraordinarily complicated. It's still not clear what the off-balance debt is, off-balance sheet debt here is for Enron, is it?
Well, there's really a ton of it. They had all these partnerships where they put a lot of their, what they consider to be non-core assets into those partnerships. They were hoping to basically have money generated, but that won't happen now.
How have the banks been reacting? How are they responding in this?
The banks are...
Good evening, everyone. Another brutal day for Enron, the once powerful energy trading company. The stock plunged further as investors around the world waited to see if the company would file for bankruptcy. It didn't. And in Washington, congressional leaders called for an investigation. We have two reports this evening looking at the latest developments. We begin with Suzanne Pratt in New York.
Enron's troubles went from bad to worse today as its stock plunged 41% and the company teetered on the brink of bankruptcy. The once high-flying Wall Street darling closed at 36 cents a share, down a quarter, a far cry from where it was trading in mid-October when it began its downward spiral. On Wednesday, rival Dynegy canceled plans to rescue the troubled company after Enron's credit ratings were slashed to junk bond status. And today, the bad news continued. Among the latest developments, Enron's European arm filed for creditor protection in London. The New York Mercantile Exchange restricted all trades with Enron, and at its headquarters in Houston, Enron said it may not be able to pay dividends on some preferred stock. In the U.S., many products were being traded again on Enron Online after the trading system was shut down yesterday.
Certainly Enron's going to do everything they can to keep operations as normal. The bigger question is there anybody else on the other side of those trades? And that's been the problem for the company the last month or so.
Experts say the question now is not so much whether Enron will file for bankruptcy protection, but when.
I don't think Enron really has much of a choice in its future. I think the the next step for Enron is probably a bankruptcy filing, and that's something that, because of the complexities of this situation, could take a couple of days before it actually gets done.
While there has been some talk on the street of a white knight stepping in for Enron, most experts see that as highly unlikely. They say Dynegy really was the best fit, and clearly that deal is beyond dead and buried. Suzanne Pratt, Nightly Business Report, New York.
This is Stephanie Woods in Washington. The Securities and Exchange Commission is already investigating Enron.
We're looking at the entire situation to not only see whether laws were violated, but whether we can learn anything and prevent some of the things we've seen from happening again.
Congress is also asking questions. House Commerce Committee Chairman Billy Tozan today called for a probe of the firm. Enron's collapse may have a profound impact on the deregulation of critical gas and electricity.
Shares of Enron today continued the downward spiral, falling nearly 30% as the company struggles as it goes into bankruptcy. At company headquarters in Houston, employees spent much of this day cleaning out their desks. And some employees spent time with several beer kegs brought into Enron's trading floor. While the company's problems are felt throughout global financial markets, the biggest effect, of course, may be on its own hometown. Casey Wyan has the story from Houston.
Although it's less than 2 years old, Houston's Enron Field is the most visible symbol of the company's influence here. Enron spent $100 million to put its name on the stadium, money it probably wishes it had back now. From Enron's sparkling corporate headquarters, half of which is still under construction, to philanthropic activities, Enron has been a dominant force in Houston.
Everything from the theater and theatrical and visual arts to recreation, charitable organizations. They supported everything in town, both as a company and also the executive team. They were important for Houston. This is tough. This is a tough thing for the city, I think.
For example, Enron raised $5.5 million for the local United Way last year, 7% of the charity's total fundraising. Enron Chairman Ken Lay has been on the boards of several civic organizations and is known as the go-to guy for groups in need of money quickly. Now his employees, 21,000 total, 7,000 in Houston, are waiting to find out how many will be laid off. Those job cuts will only have a limited impact on Houston, which has a workforce of 2.2 million and a low unemployment rate of 4.3%. Still, Enron's pain is being felt citywide.
I mean, it hurts. Hurts our ego, it hurts our image, it hurts us individually because of the people that are involved and we're so close to them. And what it does, because we have all this change, we think we'll be okay.
Perhaps the biggest impact will be on commercial real estate. Enron is not likely to need this new building, which will result in about 1 million square feet of vacant prime office space. The local economic development officials are trying to figure out which company may take Enron's place as Houston's leading corporate citizen. But some of the prime candidates, such as Compaq and Continental Airlines, have problems of their own, Lou.
Extraordinary. Houston struggling through some very difficult times. At this point, the employees that you've talked with, they pretty much assume that this is their last day?
No, some of them say that they have been told actually to report to work through Tuesday. Of course, as you mentioned earlier, we saw lots of employees carrying boxes out of their offices today. One of the most unusual things we heard is there were several kegs of beer on Enron's main trading floor, and some of the employees were doing a little celebration, if you will, celebrating the end of their tenure. Some employees are saying today's their last day, others saying they've been told to stay through Tuesday, when we expect that there may be a bankruptcy filing. Lou?
And we don't know, I suspect, whether or not they're going to keep that beer keg in place.
No, they haven't told us, and they haven't invited us upstairs either.
Okay. I'm relieved to hear that as well. Casey Wyatt from Houston.
Might be.
Thank you. Coming up next, getting into the holiday spirit despite sobering
perspective.
Good evening, everyone. The problems continue to pile up for ailing energy giant Enron. Its stock price plunged another 28% today, closing at just 26 cents, way down from its peak of $90 last year. Enron's demise is sending shockwaves around the world. In London, Enron fired 1,100 employees, shutting down its holding company and 3 trading operations there. It also stopped delivering wholesale power to some customers in Europe. At its Houston headquarters, there are reports the company is planning massive layoffs on Monday and a bankruptcy filing on Tuesday. And late today, Enron's accountant, Arthur Anderson, said that Deloitte & Touche will expand the scope of its ongoing peer review of Anderson to include the Enron situation. Now, in another development, Enron is now battling with Dynegy, its former suitor, over control of one of Enron's most valuable assets. Dynegy claims that it gained ownership of the Northern Natural Gas Pipeline Company as part of its original merger deal with Enron, and warned Enron that it will not allow the pipeline company to be part of any bankruptcy filing. Well, in a few moments, we'll talk more about this with Dynegy CEO Chuck Watson. Paul?
Stocks on Wall Street opened narrowly mixed as an attempt to follow through on yesterday's solid rally was subdued by the report that the nation's third quarter gross domestic product was revised downward to a 1.1% decline from last month's estimate of only a 0.4% contraction. At 10 a.m., the Dow Industrial Average was up 2 points, but the NASDAQ index posted a 10-point loss. Home Depot stock with about a $3 gain gave the blue chips a boost after the retailing giant announced its growth will slow in the coming years, but the forecast wasn't as grim as analysts expected. Also helping was an upgrade of the home building group by Solomon Smith Barney. By 12:30 p.m., the Dow moved to a 32-point gain, and the NASDAQ index was up 4 points. The market then began trading in a very narrow range amid the cross-currents of end-of-month institutional portfolio shuffling and the usual pre-weekend evening up operations. The Dow Industrial Average went on to close with a gain of 22.14 points, putting it at 9851.56. This week, the Dow rose 3 times and fell twice and had a net overall loss, nevertheless, of 108.15 points. Today, the NASDAQ index fell 2.68, ending at 1930.58, but for the week, the index was up 27.38 points. Big board volume today down just a touch from yesterday, 1.34 billion shares traded in a 7-to-6 ratio of down volume over up volume. The Dow Transport Index was up 26.18, utilities edged up 0.19, and the closing ticked modestly bullish at plus 349. Standard & Poor's 500 lost 3/4 of a point, nearly a half-point drop on the 100. The Mid-Cap 400 down 4 1/3 points, while the Bridge Futures Price Index rose 3.36. A loss of 0.48 in the New York Composite Index, the value line off 0.70, the Russell 2000 Small Cap Index down just over 2.5 points, and the Bradley-based Wilshire 5000 off 13 1/3 points. That downward revision in third quarter GDP gave bond prices a boost today, as did a 5-point decline in the Chicago Purchasing Managers Business Activity Index, which gave still more assurance that the Fed would likely cut interest rates at least another 0.25% on December 11th. The market faded near the close, however, as tax-free and corporates ended up showing little change on the day, while the Treasury market rose except for the longer end. The 5-year note's up 7/32, the 10-year note edged up 2/32, and a loss of 25/32 in the 30-year bond, while the Lehman Brothers long-term Treasury bond index edged up 0.58. I'll be back shortly to show you where the action was on Wall Street today. Susie?
For more now on that pipeline dispute between Enron and Dynegy, we turn to Dynegy Chairman and CEO Chuck Watson, and he joins us live from Houston. Mr. Watson, it's a pleasure to have you on our program this evening.
I'm happy to be here. Thank you.
Let me begin by asking whether you're going to be able to acquire that pipeline company if Enron files for bankruptcy, which seems imminent.
Well, absolutely. We believe that the documents that we put together were designed just for this very instance, and they were intended to be bankrupt proof, and we believe they are. So we think we have good title to that pipeline, and it'll be transferred over to us.
But if Enron fights you on this, will Dynegy be able to collect the $1.5 billion that it put initially as an investment into Enron at the time of the proposed merger?
Sure.
Will you get that money back?
Sure. The whole idea of putting $1.5 billion in was to protect it from just this sort of instance. And the terms of the deal are that we'll either get the pipeline, or Enron does have the right to call back the pipeline and pay us the $1.5 billion plus interest. So we'll either get the pipeline or we'll get $1.5 billion.
You know, investors are very concerned that this whole dispute is going to escalate into a very big legal battle, and that's one of the reasons why Dynegy stock was down again considerably today. Is there reason for them to be concerned about any litigation here?
Well, we haven't heard anything from Enron at all, even on the pipeline, much less the termination of the agreement. So I think a lot of that's speculation, and I think at this point we'll just have to see. We believe that from the time that we did the merger, obviously there were significant changes in the company. It would be hard to imagine somebody questioning whether or not that constituted a material adverse change. But you know, we'll see. I think it would be very unfortunate for Houston and the industry if we ended up getting in some sort of a squabble over that. But I like Dynegy's position.
how concerned are you that Fitch, the rating service, has kept Dynegy on its credit watch with a watch negative rating? Are you concerned about that?
Well, none of the agencies have changed anything since the time we announced the merger on Dynegy. So we'll have a chance to talk to them over the next couple of weeks, and I'm quite certain that they'll understand the difference between the Dynegy model and the merchant business, the merchant marketing business, as opposed to the Enron. So you're always concerned when you're on negative watch, but this is not anything different than we knew 3 weeks ago when we announced the merger, and I think we were strong going into this merger. We're just as strong coming out.
Have you heard from any of the other rating agencies, Moody's, Standard & Poor's?
No.
Okay. Well, you know, one of the issues that's come up, there's this considerable scrutiny about the accounting practices used by Enron, and there are questions about whether other companies in this business have used these off-balance sheet accounts. Can you reassure Dynegy stockholders that these practices have not been, used at Dynegy?
We've done that over and over again since this whole thing came out. These were fairly unique and rather creative partnership agreements that they entered into, and I'm not sure I understand them enough to even replicate them. So Dynegy's pretty well assured our shareholders that we don't have anything anywhere near like this.
With the demise of Enron, Mr. Watson, there's been a huge void in this marketplace. Is there, what opportunities do you see for Dynegy in terms of your own market share?
Well, in fact, in the future, in the physical market, we've seen an uptick already in our volumes for December. We're just finishing today bid week for December volumes in the physical business, and this is an area where Enron wasn't a major player in that regard. They're mostly a financial player and a market maker in a whole bunch of commodities, and that's partly what got them in trouble. In the gas and power business, though, in the U.S., I don't think this will have any impact on the industry. The rest of the merchants stepped up in this business. There's numerous of them, and they've kind of all stepped up and kind of assimilated the Enron position. So I don't think this is going to have much of an impact virtually at all in the physical business.
Well, this is surely going to be an ongoing story. I wish we could have spoken with you a little bit more. We appreciate you being on the program tonight.
Thank you very much.
And we've been speaking with Dynegy Chairman and CEO Chuck Watson.
The world price of oil is rebounding. The turmoil in the Middle East is raising fear of a wider conflict that could disrupt oil production. Also boosting oil prices, hopes that Russia would agree to OPEC's call for supply cuts next year. Light sweet crude oil rising 65 cents, settling at $20.09 a barrel. But the price of oil is still almost 30% lower than before September 11th. Troubled energy firm Enron confirms it will lay off 4,000 of its employees. Enron says it instructed the majority of its workforce to go home for the day. It will call workers separately to tell them whether or not to return to work tomorrow. Enron says it's asked the court to provide $4,500 in severance for each laid-off employee, but is up to the court to decide on the amount of that money and the date on which it will be given. Enron filed the largest corporate bankruptcy in American history yesterday and sued Dynegy for backing out of its proposed merger with Enron. Dynegy is countersuing to protect its option to buy a valuable pipeline from Enron. And now there is late word tonight that Enron has lined up some bank financing. Fred Katayama joins us from Federal Bankruptcy Court in New York City with the latest on this story. Fred?
Well, Lou, Enron's lawyers are meeting with a bankruptcy judge right now. The troubled energy company needs billions of dollars to pay its bills and to restart its energy trading operations as a separate unit. The company's asking the judge for authorization to access $250 million in short-term financing now that it says it's just secured. It's also got another $1.5 billion in longer-term financing from a syndicate led by JP Morgan Chase and Citigroup. It also is talking to 3 other entities it wouldn't name for more credit. The next hearing is set for December 14th. Now, this broken-off engagement has really turned into a slugfest. Dynegy counterpunched today with a lawsuit of its own against Enron. It is suing in order to try to protect its option to take control of a prized natural gas pipeline.
We put up $1.5 billion, and we expected if this thing went south that we would have a pipeline. And now, unfortunately, this company wants to keep the $1.5 billion, and they want to keep the pipeline. That's not going to happen.
Now, Enron claims that Dynegy wrongfully terminated its $9 billion merger deal. Dynegy, for its part, contends that it had the right to walk away from the deal because Enron did not fully disclose details of its rapidly deteriorating financial situation. Now, separately, a small company called Standard Power and Light says it'll make a bid to buy a majority stake in Enron. But analysts on Wall Street dismissed the move, saying it's just a little-known company. It only has $1.6 million in sales, and the company's own executives wouldn't disclose how it would come up with the financing. Lou?
Fred, thank you very much. Fred Katayama from Federal Bankruptcy Court. Enron's bankruptcy casting a shadow of mistrust on the entire energy industry, concern on the part of investors about those companies in the energy industry. Joining us now from Tulsa, Oklahoma is Keith Bailey. He is the chairman and CEO of Williams Companies. Keith, good to have you here.
Good to be here.
Or at least good to have you there, perhaps better put. The situation is obviously difficult for the entire industry. We're seeing a lot of concern about the amount of exposure that a number of companies, including yours, has to Enron. How bad is it?
Well, I think in the aggregate, certainly the exposure to Enron could be substantial, but because it is a risk management business, I think you'll also see that the exposure created by Enron is fairly atomized. That no individual company or companies aggregate a significant amount of it as a general proposition. I think the greater damage is coming from the fact that the markets are interpreting Enron's problems as being a condition that might be more generally applicable to those of us that are in the energy marketing and trading business, and that's simply not true.
Give us your best assessment, and I think I have to say here, just it's not often I'm in this situation, but I think I have to divulge here that I own stock in your company, and you and I have known each other for some time. We put you down as a friend, and I want our viewers to understand that, because we're going to touch on a couple of things here. One is, if this situation with Enron is not resolved with Dynegy, what will be the impact?
Well, I think the most obvious elements of the impact, you've had a horrible human tragedy with regard to the impact that Enron has had with regard to just its own employees. The litigation and what's ensued from the aborted merger at best is going to be distractive, I think, to Dynegy, and at worst, if Enron were to prevail, it could cause Dynegy to have to move through with the other market participants picking up the market demand, and the markets will move on. And again, I think the thing that people are losing sight of is the fact that Enron was in fact an outlier in terms of the way it strategically pursued the trading business.
By that you mean Enron pursued a business plan and a strategy quite apart from the rest of the principal companies in the industry.
That's right. It pursued what it called an asset-light strategy. In fact, would talk about not needing assets, that assets were burdens, and that the companies that were like we were, and we view ourselves on the polar extreme from where Enron positioned itself, because we are a very asset-intensive company. But they sort of said that we would not be able to carry the burden of the assets and continue to compete with them. And for a long period of time, the general market sort of bought into that proposition. But I think what has become very clear as a result of what happened to Enron is that assets are essential, and that the closer you are to the asset, the more solidly capitalized you are and the better value proposition you provide.
And that represents most of the companies in your industry.
Yes, as we would do analyst presentations and so forth, I would position Enron on one end of the spectrum, Williams on the other end, and everyone else would fall somewhere in between, but much closer to Williams than they were to Enron.
Keith, Enron was the number 7 out of the Fortune 500 a year ago. Can you give us in 60 seconds your best judgment as to what in the world happened here?
Well, I think the issue ultimately was a balance sheet issue. Certainly what precipitated the decline, or the start of the decline in the stock price, were issues around trust and some of the partnerships and that sort of thing. And when that happened in the sort of market we're in today, the effect of it was probably amplified. But much of their balance sheet was supported on equity-based structures, and as the equity declined, the debt became less viable. As the debt became less viable, the equity declined, and it imploded.
Right. Your best, can I ask for this, your best judgment as to how does Keith Bailey think this thing will finally end up?
Well, I think at the end of the day, the Enron assets will be distributed through an orderly bankruptcy proceeding. There will need to be legal resolution of the issues between Dynegy and Enron, and with the possible exception of Dynegy being forced to move forward with the transaction, my guess is that Dynegy, once the distraction is behind them, will move back and continue to be an important player in the market, and probably will be during the interim. And the balance of the industry will fill the voids of the market demand that is very real to meet a business that we believe is both sustainable and durable if pursued around the right strategy.
Keith Bailey, thanks for being with us.
Thank you.
Appreciate it.
Good evening, everyone. The Enron story took on new drama today, just a day after the troubled energy company filed the biggest corporate bankruptcy in U.S. history and sued its one-time suitor. Dynegy responded by filing its own lawsuit against Enron. It's the latest chapter in Enron's 6-week fall from the heights of the energy world. Here's Erica Miller with details.
Enron's filing in federal bankruptcy court in New York caps one of the largest corporate collapses in U.S. history. The company, which just last year ranked 7th among Fortune 500 companies, is now seeking to keep a long list of creditors at bay while it reorganizes.
The company just filed for bankruptcy court protection, which means that it need not pay its pre-petition obligations until the court allows it to do so, either through a special order or a confirmed plan of reorganization.
Today, Enron announced it will cut 4,000 jobs, 20% of its workforce. In addition, the company says it is in advanced talks with several major financial firms to arrange new funding. As part of the reorganization process, Enron also filed a $10 billion suit against Dynegy for backing out of the merger. And it is asking the court to block Dynegy from buying Enron's large northern natural gas pipeline, one of its most prized assets. In a statement, Dynegy chairman and CEO Charles Watson said Enron's lawsuit against Dynegy has no merit whatsoever in law or in fact. And today, Dynegy countersued to keep its option to buy the pipeline.
Our lawsuit in Houston has to do with our specific right, our option to acquire from certain companies that are not in bankruptcy the ownership of Northern Natural Gas, which was a part of our deal going in and a part of the consideration for our putting up $1.5 billion to buy preferred stock in that company.
Despite the bankruptcy filing and news of countersuit, Enron shares rebounded 50% today, while Dynegy stock fell more than 10%. But bankruptcy experts say Enron shareholders may well end up with nothing.
It's too soon to tell whether the asset values will hold up and whether this company will have sufficient assets to pay off its creditors. And if it does, shareholders will receive something, and if there is not sufficient value, the shareholders will not receive any distribution from this Chapter 11 case.
Bankruptcy analysts predict Enron will spend a long time in bankruptcy court. The average for public companies is about a year and a half. But given the complexity of Enron's case, some experts predict it could take the company up to 3 years to emerge. Erica Miller, Nightly Business Report, New York.
The bankruptcy of Enron leaves shareholders with more than $63 billion in losses. Bondholders, banks, and Enron's trading partners are also out billions. And as Stephanie Woods reports, the role of Enron's auditor, Arthur Andersen, is key to the investigation into Enron's collapse.
Congressional investigators plan to meet this week with executives from Enron, the Securities and Exchange Commission, and Arthur Andersen. Former SEC accountant Lynn Turner says Enron's financial restatements raise many questions, including why the auditors didn't investigate Enron's practice of keeping debt off its balance sheet.
Was this company, in fact, taking on tremendous amount of debts, facing liquidity problems as they took on that debt, and covered that up by using these special purpose entities, by misstating their financial statements. We know they're misstated now because the company itself has corrected those. And was it really something that was coming undone over a number of years?
Last year, Enron paid Arthur Andersen $52 million in fees. Nearly half was for auditing the company's financial statements. $27 million was for consulting services, such as risk management and tax compliance. And some question whether that money influenced the auditors to go easy on the company.
How did that $27 million influence their thinking as to whether to stand up and say, no, the financial statement had to be corrected? Were there any trade-offs between taking that position, which is what investors are hiring these auditors to do, versus trying to figure out how to justify what the client was doing?
Andersen's consulting links to Enron are also raising questions about the accounting firm's role in the establishment of the partnerships. Don Langvort teaches corporate and securities law at Georgetown University. He says if Andersen did have an active role in setting up the partnerships, it could have a lot more questions to answer.
To the extent that the money can be tied to the setting up of these partnerships, it eliminates Andersen's ability to say, we didn't really know what was going on. It ties them directly to a set of facts, a set of knowledge that can also be damaging.
Arthur Andersen says it's too early to make judgments and is cooperating fully with the SEC and congressional investigators. Experts say it could take 3 to 5 years to unravel exactly what happened. Stephanie Woods, Nightly Business Report, Washington.